Hello and welcome to the second expert interview. This is the second in a series of 6 interviews, which are part of the deep dive webinars, which collectively make up the FinTech Challenge Myanmar 2020. My name is Ken Owino from BOP Innovation Center. In this interview, I will be speaking to experts who will shed some light and give insights and their own perspectives on digital and financial literacy. And my first expert, or my first guest, is Diana Tjoeng. Diana is the Asia Regional Manager for Good Return. Now, Diana, the first question I have for you is, why is digital and financial literacy important?
Yeah, okay, good question, Ken. So why is digital and financial literacy important? Yeah, for me, I think that, it's increasingly important for digital, in the last decade, especially here in Southeast Asia, where I'm based. In Southeast Asia, more than 50% of the population is actually under 30 years old. So, we have a really young population that have grown up with digital. They're really poised to benefit from digital financial services. They might even bypass traditional finance. But they really need the knowledge, the skills, the awareness of rights and responsibilities to be able to use those digital financial services and actually be able to benefit from the services and not be taken advantage of. So that's why digital and financial literacy is really important. People nowadays expect to do things quickly, simply online, and that also applies to financial services. Whether we're buying something, transferring money, taking out an insurance product, we want to be able to do it online, quickly and safely.
If we break it down further, in your line of work, what segment of society have you found to be in most need of literacy capacity building?
From my own experiences in the sector, women and older people particularly benefit from digital and financial literacy. Many people might know that women around the world drive about 80% of consumer purchasing decisions. And in many Asian countries, women manage the day-to-day household expenses. However, when it comes to larger financial expenses, such as taking out a loan, we've found in our research here in Cambodia for one of our financial capability training programs, that it's often the men that make those larger financial decisions. But when women have more knowledge about financial services, what their rights are, how to accurately compare financial products, when they know all of these things, we have seen in our research that women feel more confident to actually take part in those larger financial decisions, because then they can communicate to their spouses that they have valuable knowledge about the financial sector and that the decision making should be shared for the benefit of the household.
Okay, and then what good tools for capacity building in digital and financial literacy have you identified in the course of your work?
When it comes to financial literacy tools, here at Good Return, we found that a multi-channel approach can really reach out to different audiences. So, for example, in the Solomon Islands, we partnered with the Central Bank of the Solomon Islands on a nationwide consumer awareness campaign, which included a radio talkback show with a radio drama about a typical Solomon Islands family. We developed an agent banking framework for mobile money agents. So basically ensuring that agents know how to protect the data privacy of customers and other protections like that. And we also rolled out our cafe face-to-face financial capability training program with a number of community partners. So yeah, really a multi-channel approach. And then, I mean, in terms of other tools, especially now in COVID times when many people are working from home, we found that a good tool for building capacity is an e-learning platform, particularly where you can download a course, complete it anywhere, anytime, without internet, and then whenever you have internet again, upload the course results. We've found this can be quite useful in environments with patchy internet connection, like many of the places that we work in Asia and the Pacific Islands, and all around the world now. We're all experiencing some technical issues within the internet, I'm sure. And so Good Return operates an e-learning platform called Rif Academy, and it's designed for staff capacity building and particularly consumer protection and social inclusion elements of financial institution staff capacity building. And so because it's an e-learning platform, it's online, it can be accessed by people all over the world, and there's people in India, in Ghana, in countries in Asia and the Pacific who are accessing it. And I think that e-learning is going to be more and more used in our future times. And then finally, in terms of tools, here in Cambodia, we have also run a nationwide campaign with the National Bank of Cambodia, the central bank here, and we used 6 funny videos about common money issues, and we distributed it via Facebook, a website, TV, SMS, radio, and shared it in face-to-face sessions. And with that multi-channel approach, we reached over 1.5 million people. And so I guess what we found is that, using the power of online to reach out to many different audiences, particularly through social media, where people can very easily share a post, share your videos. That's a really easy way to get financial education messages out into the community, where people are able to engage with the content quite simply and easily.
Finally, Diana, capacity building, will it be more effective if it was coupled with recipients or customers being offered an opportunity to take up financial products?
Yeah, I think that with this question around the opportunity to take up a financial product, what we found in our own experience, and it's also in the research on financial capability, capacity is built most effectively when somebody can put their learning into practice straight away, right? It's called a teachable moment. And so when you have the opportunity to take up a financial product, that can certainly be a teachable moment, because then the knowledge and the skills that you have acquired has an urgency to it, because it can be applied straight away in the real world. For example, what we found in our cafe training program in Nepal, where we partnered with financial institutions, is that the trainers that the financial institutions had hired were going out into the community each week and building up a relationship with community members. And in that way, the people who were taking part in the training became familiar with the financial institution, and especially became familiar with discussing financial topics. And what I mean by that is, whenever we're going to do something for the first time, it can be scary. It can mean that we feel like we might ask a silly question. So when it comes to building financial capability, if you give people the space to practice a new behavior, like, asking questions about a financial product in a safe environment, practice negotiating, for a deal for themselves, or, practice doing something new, like setting a PIN code on a financial app for the first time. When they have the chance to practice, this develops their confidence to use financial products. And then if they have that opportunity to take up the financial product, they can put their learning and their practice into action straight away. That's what we've found from our experiences in different countries.
And the next expert is Lilian Wang. Lilian joins us from Myanmar, where she works as the country manager for Visa.
Thank you very much for your time, Lilian. The first question I have for you is that, thinking about Visa, most of us have Visa cards in our wallets or in our pockets, but we are also aware that Visa's scale goes beyond just card business. So can you please tell us, why is digital and financial literacy important to Visa as a company and as a brand, and how has Visa contributed to digital and financial literacy?
So digital payments is central to growing the economy. So for every 1% increase in electronic payments, it adds to 0.16% to the future GDP. So it's very, very central to growing the economy. Advances in money movement not only is a catalyst for innovation, but it also connects communities. It also maintains an open environment, an inclusive environment. So what Visa has done is we've approached the digital and financial literacy in a couple of different ways. The first is we launched a practical money skills website. This was late 2018. That's been very, very successful for us. It basically offers online tools. So youth, educators, consumers of all ages can use the online tools and learn about fundamental financial skills. It also teaches consumers how to make the most out of their electronic payment tools. This has been ongoing for the last couple of years, very successful for us. The other avenue that we've taken is we've just released a series of videos. Now that we're in a time where e-commerce is taking off, we've released a series of videos that talk about how to shop online safely, how to prevent phishing, how to click and pay, how to use your card, your virtual card, your card on file. So we released a series of educational videos recently. Another avenue that we've taken is that we also used our brand ambassador. We used a very popular figure in Myanmar pop culture, Sai, to help us push digital payments. But I just want to highlight one thing. When we talk about digital literacy and financial education, we often talk about the consumer, but it's not just for the consumer. Actually, it's for everybody in the ecosystem. So the importance and the benefits of digital payments should be understood, and not just understood, but promoted by businesses, merchants, large and small, government, financial institutions, the issuing side as well as the acquiring side. All of the players in the ecosystem should be promoting digital payments. That would greatly strengthen the ecosystem and also grow the economy ultimately.
Secondly, as you're trying to promote the adoption of financial technology and innovation that will ultimately enhance financial inclusion in Myanmar, we also have to pay closer attention to the end users or the consumers. Are they receptive?
The short answer to that is that the Myanmar consumer is very receptive to new things. We started a research called the Consumer Payment Attitude Survey back in 2017. And this survey, this research basically measures the changes in terms of the attitude, the perceptions, the behavior towards new payment tools and towards personal finances. So we started this research back in 2017, and we conduct it on an annual basis. So just to give you a few data points from this, in the survey, 26% of participants either own an electronic payment tool or have used electronic payments. That, as opposed to 3% just a year ago, last year. So 26% compared to 3%. 7 out of 10 of the participants say that they plan on using electronic payments, as opposed to 2 out of 10 last year. 26% of participants have tried going cashless for a few days. They've tried going completely cashless. And all of the participants say that they believe that Myanmar has the potential to be a cashless society within 10 to 15 years. So there is definitely, the consumer is definitely receptive in terms of new things, new innovations. But 2 other data points that I just want to point out that's unique to Myanmar is that the young population, the average age of the Myanmar population being 27 years old, this young population, these are your change agents. These are your early adopters. That combined with over 90% penetration, smartphone penetration in Myanmar, the 2 ingredients is really a recipe for accelerated adoption of digital payments. So yes, we believe that the Myanmar consumer is very receptive to new innovation.
It's very interesting, the numbers that you mentioned. They show that there is a lot of opportunities, but I understand that there also has to be challenges that come along.
There's a large opportunity out there, especially to displace cash. So 0.5% of the PCE, the personal consumption expenditure in Myanmar, is in electronic payments. The rest is cash. So there's a very large opportunity to displace cash. But if I take that one step further, let's talk a little bit about, more importantly, the speed of adoption of digital payments. So the speed of adoption is directly correlated with the consumer's lifestyle. So the payment tool, how closely correlated the payment tool is to the consumer's lifestyle increases. The more closely aligned, the higher the speed of adoption. What I mean by that is, we mentioned that there's over 90% smartphone penetration. Obviously, the mobile phone is central to the consumer's lifestyle. How closely that form factor is in the payment tool, and what I mean by form factor, it could be QR code, it could be contactless. How closely that channel is, that payment tool is to the consumer's lifestyle, greatly increases or determines the speed of adoption. And I'll give you a more recent example of that. So through this COVID pandemic, we saw that the rate of contactless transactions, or the penetration of contactless transactions, actually over doubled for us. And that was directly correlated with what was happening, right? The person's lifestyle. There's no touch. Nobody wanted to hand things back and forth with the cashier, right? So it was completely touchless, and it's just a tap and pay. So that's an example of how one particular form factor just increased twofold, just given the change in lifestyle. As for challenges, well, in our survey, the research that we did, over half of the participants said that they were only slightly knowledgeable on financial services, financial skills, only slightly knowledgeable. So clearly we have a ways to go in terms of digital and financial literacy. We have to continue to work closely with all the stakeholders in the ecosystem, the merchants, government, the financial institutions, fintechs, everyone, to continue to promote financial literacy. We still have a ways to go.
And now let's just try to paint a picture, looking at Myanmar, all these opportunities and challenges that we are seeing. Do you think Myanmar will leapfrog into digital payments, even as new methods of payments and technologies continue to become available?
I think we can leapfrog into the digital age with the proliferation of all these new innovative payment tools. It will definitely, it will penetrate the population deeper, and therefore more people will have easier access to new payment tools. Our strategy is basically to work with the fintechs to accelerate the development of new innovative tools. And we do that in 3 programs. The first one is we have something called the Visa Developers Program, which gives fintechs direct access to our APIs. Another way is our FinTech Fast Track program, where for our rapid onboarding. A third one is Visa Everywhere initiative, and that is opening up our innovation centers around the world and co-creating with the fintechs. So these are different ways where we work with fintechs to accelerate the development of new innovative payment tools. And with the proliferation, the accelerated development, it'll offer greater access. And therefore, yes, Myanmar does have the potential to leapfrog into the digital age.
Very well said. Let's now go to Andreas. Andreas comes from the Organization for Economic Cooperation and Development, or OECD. So, Andreas, first and foremost, what does digital and financial literacy mean to you, and why is it important, especially in this period of COVID-19 pandemic?
The OECD, which has adopted the definition of financial literacy back in 2005, defines financial literacy as a combination of awareness, knowledge, skills, attitude, and behaviors that are necessary to make sound financial decisions and ultimately achieve financial well-being. So I think building on this in an increasingly digital world, in which financial services and products are offered digitally and consumers live increasingly digital lives, we should identify new core competencies that are needed to achieve this financial well-being in a digital world. For example, when it comes to awareness, there should be an awareness of the different digital products and services that are available, both for personal and business purposes, and their benefits and risks, of course. An awareness that marketing and simplified, for example, online lending processes can increase the temptation to access credit without considering the consequences. When it comes to knowledge, we have knowledge of consumer rights and obligations in a digital world. For example, understanding the implication of digitally signing a contract, accepting terms and conditions. It's not because it happens in the digital world that it's not real and it doesn't have real consequences, right? And then when it comes to behaviors, we can identify some, especially relating to the protection of personal data. So manage one's digital footprint to the extent possible, avoid engaging in risky behaviors when it comes to identification numbers, etc. And all this was important already because of trends that are taking place globally. I think COVID made this even more relevant and made public policy action on this even more pressing, because it has forced a shift to digitalization for many consumers that were not ready to go digital when it comes to managing their personal and financial lives. So this can be exposed to online fraud, scams, much more than before, obviously, and this can substantially increase their vulnerability.
I get it. digital and financial literacy is very, very important from how you define it. Therefore, it's quite important, or why do you think it's quite important for national governments to have a national strategy on digital and financial literacy?
Thank you. This is a good question. At the UCD, we have been supporting the design and implementation of national strategies on financial education for a while now. We developed high-level principles for the G20 back in 2012 through the OECD International Network on Financial Education, and a lot of research and work has gone into this through our network. This is even more important today in the context of the need to address the issue of financial literacy, because we know that more and more consumers will use digital financial services, COVID aside, and we have seen how that will accelerate some shifts, but more and more consumers will use digital financial services because, especially in emerging markets, they help to improve access. And in emerging and mature markets alike, they make the user experience better. You know, they're easy to use, you can have a familiar interface, they can be more affordable, tailored, they allow for electronic record keeping, for example. So there are several advantages, which means that more and more consumers will use digital financial services. But there are also risks. This can be market-driven, regulation-driven, consumer-driven, but whether the angle from which risks come from and originate, they can have negative consequences for individuals and small entrepreneurs alike. We can have new types of exclusion from particular policies, such as insurance or credit, or for particular groups. So elderly people, those on low incomes, those that display low levels of digital or financial literacy, you know, which can bring to self-exclusion from digital financial markets. We can also have a risk of over-indebtedness, especially for young people, because they spend more time online. And we can have, as I mentioned earlier in response to your earlier question, we can have an increased vulnerability to scams, frauds, and also mis-selling practices. So I think all this makes digital financial literacy more and more needed. And this is best addressed through a national strategy on financial literacy, we believe at the OECD.
And Andreas, what good approaches to digital and financial literacies have you identified in regard to both national strategies and tools for building capacity?
So the first approach would be, of course, I wouldn't be working at the OECD if I didn't say this, data collection. So it's really key to have a diagnosis of both the supply and the demand side when it comes to digital financial literacy. So digital readiness of consumers and the product offer and the services that are offered digitally. The second one would be ensure coordination with the private and not-for-profit sector. This is very useful. There can be expertise, there can be more closer proximity to target audiences that you want to reach. And there can be also financial and in-kind resources. We need to also to identify new specific core competencies. I mentioned some earlier when talking about what it means, what digital financial literacy means. And this can be identified. It's sort of a continuous process. For example, within the International Network on Financial Education, we started identifying a few new core competencies on digital financial literacy. And then we added more once we dived into the analysis of the risks and benefits of the use of personal data. So core competencies on financial literacy. Another thing is, it's not just because we talk about digital issues that we must only go digital about it. So using both digital and traditional delivery of financial education is important. There are certain sectors of the population that are less likely to learn about digital financial literacy if they learn it only digitally. So face-to-face and traditional, such as radio, TV, etc., can be used. And again, I wouldn't be working at the OECD if I didn't say this. It's very, very important to evaluate what works. So monitor, evaluate, and share the results with the research community, with international organizations, etc. On your last point on tools for building capacity, again, I think we need to be very mindful of the need to understand the situation before. So understand the needs of your target audience in which you want to build capacity. And this should be ideally done both quantitative and qualitative analysis. So financial literacy, financial inclusion data, but also the use of focus groups and qualitative interviews to understand the needs, to understand what might work better in a certain setting and for certain target audiences. And something that we have been working on, again, through our network, using insights from behavioral economics. This can be particularly useful when digital delivery is used, because, for example, think of built-in nudges into financial products, or the possibilities to present information in a certain way, make it more appealing and more effective, etc. So these two tools for building capacities are the ones that I would identify in particular.
And as we wrap up, Andreas, what will be your advice to governments on digital and financial literacy, especially in the context of increasing digitalization of finance?
What I would stress in particular, the need to take into account digitalization, both with respect to the content of financial education programs, so making sure that individuals and entrepreneurs are aware of the possibilities and risks linked to the increasing digitalization of finance. So content, but also when it comes to the delivery methods used. This is something we're working on currently. There will be research published by the end of the year. We're working on understanding how digital delivery of financial education can make the financial education more effective and have a longer lasting impact on the target audience. And then I think a last point would be to consider the benefits of international cooperation both ways, right? So not only learn from what is being done elsewhere, because any given government might be facing challenges that another government has already faced. And so there might be policy solutions that have been already designed and adopted elsewhere that can be used and useful. So learn from what is out there. And the second one is, I think I mentioned this very briefly before, share what works and contribute to develop an understanding of these issues.
Very well said, but I think we'll have to leave it at that for now. Thank you so much for watching, and thank you to the experts for sharing their insights and perspectives. My name is Ken Owino. If you want more information, you can find that on our website. And if you have questions, please leave them in the comment sections. But until next time, goodbye.